Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, it's turning out to be a session which is quite quiet for the frontline indices, but the mid-caps are outperforming. But let's get talking about one particular segment, that is private equity interest within the entire pharmaceutical and healthcare space. We have Quadria Capital, which is a healthcare-focused private equity firm managing assets worth around $3.5 billion. The firm has made investments in the public listed space in Indian companies such as Akums Drugs and Pharmaceuticals and Concord Biotech as well. Quadria has partially exited Akums during its IPO in August 2024 and fully exited its investment in Concord Biotech through the company's IPO in August of 2023. To talk more about their themes and the approach towards Indian healthcare, we have with us Sunil Thakur, who is a partner at Quadria Capital. Joining in, Sunil, hi, welcome to the show. Well, let's start by talking about your two listed investments that you had Concord at one point in time, but give us a sense in terms of the kind of returns that you made for both Akums as well as Concord Biotech.
Thank you, Ekta, and good afternoon to you and your colleagues. Thank you for having me on this show. As you rightly mentioned, we took two of our pharma companies to the public market in the last 1 year, and they have been pretty successful. For us as a fund, they've delivered over 3x returns, and it mainly comes because of the thesis that we used while investing in both the companies. So Concord, if I talk about, which we took public about a year back, exactly about a year back, is a company that's in the specialty pharma space. It's a global leader in immunosuppressant space. That company has a solid global leadership in that particular therapy area and has done pretty well since the listing. It's doubled since the time we took it to the public. Similarly, when you talk about Akums, that clearly underlines the thesis, which is backed by the huge global and local pharma demand, especially the local pharma demand. Akums manufactures about 10% of what is consumed in the country, and that thesis has been well taken up by the public market and has seen a stupendous success after listing. The stock has gone up by about 35-40%. And again, we delivered over 3x on our investment. And these are two trends that we would want to back going forward with any pharma investments that we make in the future.
So what specifically is the trend? A strong market share in whatever the company does?
So very specific things, I would say. One is on the specialty side, which is, manufacturing pharma products that are complex to manufacture and grabbing a large market share using a technology that's differentiated and creating a lot of barriers. So Concord, if you talk about, it's a fermentation technology that is being used to manufacture complex transplant medicines. If you talk about Akums, that delivers a thesis which is built on scale of, having over 16 plus plants in India and having a market share that constitutes about 30% of the overall contract manufacturing share in the country. And every 10th product, pharma product that you consume in India comes from Akums. So on one hand, Concord signifies specialty. On the other hand, Akums signifies scale, volume, generic products for a market that needs huge consumption of pharmaceutical products.
Okay. Well, that point is taken. You do have this put option in Akums. Can you just explain to us what it is and if it's exercised?
So there is no put option. It's just a term that most private equity funds use when they make investments in private companies. But now that Akums is listed, there is no such option or there is no such special rights that we as a fund have.
Okay, so no special rights in, Akums. You have, I think around 4 to 4.5% pending stake in the company. What is the timeline of an exit?
We like the story, and that's the reason why we retained our, 1/3 of our holding in the company, and we believe in the long-term growth of the company. So we won't be selling in the near future. We still have about a runway of about 6 years in the fund for us to before we liquidate the fund. So we would be holding in for some time. In any case, as we speak, we are in a lock-in period.
Yes. Okay, so you'll be holding on at least your stake even post the holding period. At least your visibility should be around 6 years. That's what you indicated?
That's for the fund life. There are no specific comments with respect to Akums, but as I said, we believe in the long-term story of Akums, and we would want to see that we do justice to our holding in that company.
Okay, so as of now, you're at least staying on. Can you give us a sense in terms of what you're looking at when it comes to the services segment? Because there's a lot of interest which is coming into, hospitals when it comes to private equity, as well as the medical technology or medical devices segment.
No, absolutely. See, the sector itself requires an investment of up to around $250 billion over the course of next few years. So there are many segments within healthcare delivery that we like. But if I have to be specific about some of them, we like single specialties quite a bit. And we've been very successful over the course of last 10, 12 years in delivering good returns when we invest in single specialty. Further, what we like is we like the entire diagnostic space. The per capita consumption of diagnostic in a country like India has to go, and it's a decadal growth story. We like regional hospital plays, not so much pan India, but regional hospital plays. Which plays on brand, which plays on the entire local ecosystem, and create a solid hub and spoke model. So these are the few segments within healthcare delivery services that we like.
So you like single specialty segments and you like diagnostics, which is a multi-decadal growth story according to you. But growth has pretty much, slowed down a little bit in the diagnostic space. How do you pick and choose within the diagnostic space in terms of private equity investments, considering that there are a couple which are already trading at extremely high valuations, and maybe the others won't be able to make that much of a mark when it comes to market share?
Well, there are many white spaces in the diagnostic area. So while we have few listed companies and they may set a trend line of the overall growth, but if you look at the mid-market players, if you look at players who are playing a regional story, if you look at players who are playing the specialty diagnostic play, you will have enough and more opportunities. And we believe that there are quite a number of companies that can tick off that checklist of being a specialist, being a regional player, and having strong moat and value proposition that will be attractive to any private equity investors like us.
Can you tell us what your strategy would be in Strand Life Sciences? How much do you hold in that particular firm? It's a specialty diagnostic company. What is the plan? Is it eventually going to come to the market?
Ekta, we sold our stake to Reliance few years back.
Okay.
So while it shows as one of our portfolio companies, but and a company that we take pride in, because again it played the specialty diagnostic area, we sold our stake to Reliance about 2 years back.
Okay. All right, Sunil, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Sunil Thakur, partner at Quadria Capital, talking about their investments within the entire Indian healthcare space. We'll take a short break. We'll get you more on the markets, and Lata will decode why the chief economic advisor has questioned RBI's inflation targeting framework. Stay tuned.